The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we found a mostly risk-off trading day on Thursday across the grains and oilseeds and across the protein complex as well. Soybeans, meal, Chicago wheat, Kansas City wheat, kind of the downside leaders. We did find more pressure in feeder cattle and some in live cattle as well. Let's talk through things and discuss what we saw in the markets as we're looking to close out the week. Brian Doherty, Senior Market Advisor at Total Farm Marketing, is with us here today on the show. And Brian, good to catch up with you again this week. And you know, it's never a fun day to talk markets when it's a sea of red like what we had on Thursday. Let's start in that grain and oilseed complex. Your thoughts on, was it just some profit taking possibly here as we near the end of the week, Brian?
You know, it's one of those days, to your point, where all of a sudden there's just red on the screen pretty much everywhere, right? And is it a bigger event, or is it just one day, or is there a little something else going on here? And I think that the bearish traders would argue, look, you really haven't had any new bullish news of consequence, if any, the last few sessions. And yesterday, when beans were pushing back higher and toward the high of the day and the contract high, one of my colleagues said, what's in the bean market today? There was no news. And then beans are down 28 cents today on November 26th in January. So I think a couple of things have happened. One, I do think, excuse me, I do think that farmer selling has picked up. So we talked to a number of producers who were just at that inflection point where the market kind of paused, and they said, I think I need to sell some beans. I think I need to sell some corn. So I'm going to say that's one. Two, when you get a push up like this, beans 3 days in a row, toward their highs, corn almost a week toward their highs, and not pushing through. I think traders become either impatient or they run their sell stop up right under the market. So if it starts to weaken at all, they went out pretty quick. And I think that's probably more what you had today, and some profit taking then ensues, maybe some new hedge pressure, maybe some farmer selling. I don't know if there's any one outside force that I would argue was a factor in today's marketplace, Jesse.
Well, I know we saw some news on the news wires about wheat and sorghum sales to China. There's still talk about these potential soybean sales out there. There's some talk about COFCO and others in China, announcing, some purchase news on Thursday, or at least they've committed to things. So I think there's still a fair amount of uncertainty out there across this trade, Brian, is where I'm going with this, especially in the soybeans. It just seems like we're waiting for more concrete answers on certain things.
Well, I think what the market would like to see is just some really big numbers, some big purchases, right? So we've seen some purchases and we've seen some activity. And then you have, there's so many people analyzing this. They're saying, well, if you look out, the price of soybeans is cheaper as the Brazilian crop, gets down the road. Um, Hard to say. I think we need to focus back on the strategic approach here, because you and I are trying to talk about or rationalize why the market's moving today, or maybe day to day. Big picture perspective, you've had a post harvest recovery that is generally going to be met at some point with some type of selling. Farmers store, or they hold off selling for a reason. They want to sell higher. Well, it is higher. So I think there's that. So, but let's concentrate maybe more on the strategic side of it, that if we can't really find a reason for this, what do we do from here as a farmer? Do we say, oh boy, beans down 25 cents, I've missed it? No, you haven't missed much. You missed the high maybe a couple of days ago, but you're still in the very upper range of the recent recovery. And so, get the marketing pencil out, start making some decisions on whether it's okay, time to let some go, or is this just a pause before the market moves higher? The technical indicators all point to higher yet if you're a technician, but they also point that a market was in a well overbought condition. So you're going to have correction. You're going to have somewhere along the line corrections. And that's what it looks like to me today.
Well, and I will steal your line here, but this just goes to show that marketing doesn't take a day off, Brian. I mean, that's kind of the point here is that you could have a down day, but we've had a good rally. We've had some opportunity here for farmers as they wrap up harvest, but you got to sharpen up the pencil and be ready for some of these moves day in and day out, just as it adjusts things on positions and charts, et cetera, et cetera. Again, marketing doesn't take a day off, does it?
In particular when prices are not what I'd call stellar, right? So there's a lot of forgiveness, and when corn's at the upper fives and you miss a day or two, uh, when it's 430 and or 435 and then it's 420, the relative change has become more important. So it is a little bit more, I think, sensitive, or farmers should be more
Mhm.
sensitive that the market, even on a smaller move, it has impact at lower prices. So, right, marketing doesn't take a day off. I think the market had moved enough, like I said, to reward in some capacity. The question is, do we, as does the industry, do farmers, for instance, look ahead to new crop and go, well, we're near $11 on new crop beans on the board, and December corn near 465. It might be regretful, but I'd at this point be a little more patient. Those prices don't really excite me with two growing seasons, the southern hemisphere and northern hemisphere in front of those crops. So I did want to bring those up because, well, marketing maybe doesn't take a day off. Sometimes you can just pause, and I think we're pausing on those bigger picture perspectives and prices out there.
Well, and South American weather, of course, is going to be a bigger and bigger and bigger part of our conversation here as we move forward. And right now, at least every indication I see, things look favorable in Brazil in particular when it comes to the weather. And the meteorologists I've talked to, every now and then folks like to try and find some sort of bullish rumor or bullish story about weather in South America for our markets, but I'm just not seeing it right now. So that's another big picture item that I think we have to keep in mind here over the next several weeks ahead, Brian.
Well, we do, and it becomes more important. And I'll be the first to tell you, so I'm not hypocritical that if we are going to talk about weather, let's concentrate maybe in about mid-December when it matters.
Yeah.
That being said, in October, November, we look for trends that may be starting, right? So is there brutal dry? Is it brutally wet? Nope, and nope to both of those. Maybe a little on the wet side here recently, was a little on the dry side 2 weeks ago. And I'm clumping Brazil as just one big area. The states vary a little bit. But what I don't see in that southern hemisphere today is any type of a real threatening pattern. And that can change, but I don't see that today. And that is maybe one of the things that the market, when you start going down your ledger sheet and going, well, what could be bullish or bearish? That's neutral right now. I would say neutral at a low price environment usually means the world has enough inventory. So I would call it neutral to a little bearish. Unfortunately, there's just not anything that's applicable right now, I think, in the whole southern hemisphere.
With all the pressure in soybeans and wheat on Thursday, here's this corn market only down, what, 4 to 6 cents really on the trade. And this is just kind of that same theme continuing here in corn while we're seeing all these volatile moves elsewhere. Corn's up a few, down a few, trading range bound for the most part. Corn's just kind of chugging along here and churning along in its range right now, Brian.
It is, and today, despite the market being down 6.5, doesn't have a good flavor to it, but no technical damage on the charts. Still, like to your point, range bound. Even soybeans, their ranges lately have been pretty large, and dropped back to the 10-day moving average today and found support there. If you think about that, the average price the last 10 days, but that does have a softer tone relative to the corn market. Wheat prices have had an impressive showing lately, but just as equally, maybe not as impressive today. Chicago wheat down to about 18 cents, slipped back under the 100-day moving average. But there again, nice steady uptrend here since a bullish key reversal in mid-October, holding in there well. We just don't see much of a story right now in wheat from almost any perspective. I just don't have a fundamental story that is driving the market. I don't have a demand driver right now. I don't have a supply concern. So I love the recovery in wheat. I think it's mainly been technical in nature. And I think the money flow has been buying into corn, beans, and wheat. We've seen that. The question is, did that take a breather today? Are they starting to get out? My guess it's a breather. Commodities are still row crop commodities are still very good value to the world market. A pullback like this should spur additional buying interest.
Brian Doherty with Total Farm Marketing, our guest analyst here today on Market Talk. Let's go over to the cattle complex first. We did see more pressure, more lower action in fats and feeders on the day Thursday. Now, thankfully, we did not test expanded limits that we did have on in the futures, but still deferred feeder contracts kind of took the brunt of the losses, and we saw some of that pressure spill over to the hogs as well. I think just a more of a down day here. But when you look at this cattle trade, volatility continuing, rumors about the Mexico border, all these different things, it just seems like more funds getting out of positions, all sorts of things happening here in this cattle trade, Brian.
In particular, if you look at the cutout values in cattle, they've firmed and they're not at their high, but they're closer to their high than they were 2 weeks ago. And the cattle market has flipped down pretty hard since. So it does look to me it's a little bit more technical in nature here. But also, we talked about this all the way up and up and up. And we said, well, seems like demand's hanging in there. And this was a cash led rally. And I think a combination of sometimes cash led rallies, it's hard. We've talked about this sort of linear move. It's hard to keep that. To me, it's just hard to ask a market to have a linear move upward without corrections or pullback, and probably well overdue. We talked a little bit about this, but let's look at like the December cattle contract in mid-August around 235. And then it dropped off, then it rallied a little more, dropped off, and then it rallied again and peaked here at about 246, then dropped back and consolidated again around 235, and now slipped under that. But if you kind of take those peaks out of that and you smooth that chart out, we've been kind of rounding the top in this cattle complex here for now 2 months. And that last acceleration upward seemed to be a little more maybe money related. So when the market pulls that back, you're going to get stop orders triggered. It's a big, healthy correction in a market that has been very resilient on the cash side of things, in particular when demand seems to cycle back in. So the question is, are we going to get holiday demand now, or is there a bigger story? Is there more economic concern? We're seeing some reports of additional job layoffs, those type of things. Are they just a function of normal movement in and out? AI eliminating some jobs, government shutdown, some of these uncertainties that the market doesn't like from a demand perspective, that too may be underpinning the cattle perception, not necessarily the cattle market. Again, you look at the cutout values, I think they're pretty impressive. The choice cuts, select cuts, choice 377.97, so 378, Jesse. Select cuts 362. That should start bringing some support to the cattle unless they're ready to capitulate, and there's no sign of that.
Well, and I wonder here too, as I look at Thursday's cash cattle activity, some more 230, 232 live bids, 355, 360 dressed is out there. The sharp discount that futures have to cash now again. I just wonder if that's something that could help underpin this cattle market here, potentially, eventually here as we, get into the middle part of the month, Brian.
I've got to believe that the first reaction here in the marketplace is just that spread deficiency that you referred to, and that maybe a combination of both. Maybe cash comes down some, but the board likely makes a turnaround here at some point and brings the money flow back in. There's too much of a discount there. Something's got to give, and I would make the argument it's probably going to be the board, as in it's going to move back up. I don't magically think we've got a bunch more cattle that are coming to market. What we do have so far, though, this I'm going to say this fall, is good weight gain weather. So no weather issues. We always kind of keeping our eye open here. We always keep our eye open mid-October through, let's say, winter, when you get those sloppy conditions, warm up, cool down, sloppy feed. Yeah, too much rain, sloppy rain, snow, sleet mix. I call those evaporation days. Things look pretty good from that front so far.
Hog trade also under some more pressure Thursday. Hogs feel listless here to me. I'm not finding anything fundamentally, exciting right now as I look at this hog complex. I mean, what's your thoughts there, Brian?
Maybe that's weighing in the cattle complex a little bit, Jesse, because the hogs have been in this kind of steady, steep downtrend for well more than a month. And I'm a bit perplexed at it. I'm not sure why we're not seeing a demand cycle into hogs. We know we got a limited supply of beef, and we're not bringing those cattle in yet from Mexico. That may be on the horizon. We might be importing some beef out of Argentina and Brazil, but nothing to date of consequence that I'm aware of. And yet the hog market has had a real struggle. It looks to me like a market that is woefully undervalued and will likely all of a sudden wake up. And that's how trends sometimes go. For whatever reason, I don't think people can put a finger on it. We look at cattle, they just trend it up, and then they take it back. Hogs have been trending down. I wouldn't be surprised if all of a sudden we see hogs move up. It's not that we've got this real shortfall of hogs, but I think we've got a vibrant underlying demand in the marketplace. And with a trade deal with China and other countries, I just got to think there's an optimistic view in the hog complex.
Any notes for you in the dairy complex here this week, Brian?
Volatility is probably the word I'm going to use. Mixed values today. November is now obviously the lead month, up 10 today, and then 4 lower in December as we do this program, and 4 lower in January. Good volatility. We've seen some shine, some I'm going to say cracks of sunshine come in. We get some up, but it's a tough market to get too bullish about yet. Just a little bit too much inventory. The processors, I think, know that. They're not jumping through hoops to get it bought. So far, so good on their end. And again, maybe the same thing that we've talked about in the beef market, hog market. Maybe it's just concern that the consumer is running out of capital for those additional expenditures.
Brian, as we close out today, anything final you would mention or reiterate for folks?
I think we'll circle back to the corn and soybeans in particular, and maybe some wheat if you have in storage. Remember to reward the rallies. You don't have to do it in a big way, but I think it's as much a mental game as anything else. To, if we see push higher or a price you'd like to sell at, follow through and sell. I'm pretty sure I'm going to get some phone calls tomorrow. Some farmers that said, "Oh, I was going to sell yesterday." If you're going to sell, get your orders in. Remember that we're not running out of supply in these markets. The debate is whether we've got record yields or less than record yields. So supplies will be plentiful on price rallies, at least initially. Farmers need to generate cash flow this year.
Brian, if folks want to reach out and talk with you and have a conversation at Total Farm Marketing, what's the best way?
Best way is a phone call, 800-334-9779. Thank you, Jesse, for allowing me to put that out there. And then I would argue probably an email is pretty proficient too. That gets in my inbox. Brian at totalfarmmarketing.com. Brian is with a Y. So shoot me your questions or thoughts or comments there, and we'll be happy to have a conversation and talk about what might be important to you.
And you can also find more at totalfarmmarketing.com. Brian Doherty, always good to talk with you, sir. Thanks for joining us again this week.
Thank you, Jesse. Much appreciated.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.